Welcome. In today's episode, we'll be discussing central bank events, the price of oil, and all the PMI and economic data. All with Bob Mason of FX Empire. This is your midweek market drivers. Hello, Bob. Good to see you again. Let's start with central banks. Looking at the economic calendars this week, central banks are due to make some announcements. What should our traders be specifically looking out for?
Following the BOJ on Monday and their delivery of further support to the coronavirus-stricken economy in Japan, we got the Fed and the ECB in action. Fed unlikely to drop rates to zero just yet. Obviously, that's Trump's desire, so he'll be definitely giving us 10 cents worth once the Fed delivers its press conference later on today, on Wednesday. They'll be promising more support, however. They're not going to be wanting to rock the markets. They will be talking about doom and gloom and preparing the markets for a marked contraction in the economy, ahead of first quarter GDP numbers on Thursday, and obviously second quarter numbers that are going to garner even more attention. And then you've got the ECB. Well, the ECB's, what are they going to deliver? We're seeing the EU projects coming under fire right now and into question, so that would be an interesting one. So yeah, the Fed's going to be the major mover for the global financial markets on Wednesday night. So expect plenty of interest in what the Fed has to offer.
So central banks have been easing their policies since the start of the pandemic. Last week, we discussed oil prices being in negative. How are oil prices looking this week?
Things are not much better for oil prices. WTI has taken another slump and Brent's in the red for the week. That was a Monday tumble. Things have stabilized a little bit midweek, but, expect oil prices to remain under pressure. There's two dynamics there. Firstly, there's obviously the output side. US need to join OPEC and give OPEC signs of commitment to actually having a material cut in output. Only then will we likely see the likes of Saudi and Russia follow suit. If they don't deliver, that's more negativity for the oil price market. Saudis can stomach sub 10, as we've discussed before. So they'll be more than happy to let the likes of US shale producers suffer. Economic indicators remain negative. The outlook, still doom and gloom. We're not expecting a V-shaped recovery in the global economy, so that remains a negative for crude oil prices. So, the only upside is a possible, conflict in the Middle East with the US and Iran, seeing tensions rise. But near term, focus remains on supply and demand, and obviously looking at the economic outlook, near term, that's negative, for oil prices. So expect pressure to remain.
In the current environment, correlations between asset prices are no longer valid. But how about macroeconomic data? Are they still having an influence on exchange rates?
The macroeconomic data, I've talked about this over the last couple of weeks. We need to get past the March, April figures really to then begin to see the bottom of the abyss in terms of, the economies and the impact of COVID-19. So while we're going to look at, first quarter GDP numbers out of the US, obviously there's private PMI numbers out of China this week to consider as well. And, the weekly jobless claims figures, we're going to need to see that, come down significantly, from the levels we've seen over the last couple of weeks. But yeah, overall, is the data having any material effect? No, not really. It's all hinged on, updates on the coronavirus, the number of new cases across the key economies, and obviously government plans in terms of reopening to spur, the anticipated economic rebound, whether it's V-shaped or not. So data, not really of material influence until we start seeing May, June numbers really.
Recently, New Zealand announced that it has no new cases of coronavirus. One of the first countries to announce this. How's that having an effect on their economy and their currency?
Yeah, it was great news from New Zealand. We've been seeing a bit of positive news, all around on the coronavirus front. So the fact that New Zealand reported to be free of, new cases is certainly a positive. And when we're looking at economic data out of New Zealand, it's actually not been as bad as, the markets were anticipating. Even trade data out of New Zealand on Wednesday morning provided some surprises, and it had a record high in terms of exports, for March 2020. So Is the Kiwi dollar really heading for a slide? Is the RBNZ going to deliver negative rates? We've talked about it. It remains to be seen. It's going to have, the RBNZ is going to have some breathing space now. We can see a reopening across New Zealand, a pickup in, activity. It does remain to be seen whether, demand is sustainable, but as other economies begin to reopen, and China in particular, then that should be a positive. One downside, however, is obviously tourism. There's going to be none of that near term. So that's going to be one negative that the RBNZ will need to consider, and obviously consumption. So on that side, it remains to be seen. We've seen the Kiwi dollar find some support this week, but it's trailing the Aussie dollar, so there's still a long way to go, and that talk of negative rates remains an issue for the Kiwi dollar near term.
Despite good fundamental news, the exchange rates are still set by central banks. Is there any news regarding ECB putting any pressure on EU member states?
Yeah, in terms of the ECB and pressure on EU member states, I think Lagarde's going to be a little bit miffed that EU member states were not able to deliver the 1 trillion that the ECB had sort of earmarked for, support to the economies that were most adversely affected by COVID-19. So that's likely to come up in the press conference on Thursday. And she's going to want to put pressure on, the likes of, the Netherlands, Germany, the northern EU member states to provide support. Obviously Spain, Italy, and even France have been hit quite hard by the virus. Germany less so, and is the first mover in terms of reopening, in terms of the economy and lockdown measures. So yeah, they're going to want to force EU member states' hands. Obviously, even within the ECB, Lagarde's hands are tied. Really in terms of delivering more sizable monetary policy support, just in terms of the structure of the ECB and obviously representation from the member states. So expect plenty of chatter on that in the press conference. Will they deliver more? Well, they're going to have to. Obviously there's a sizable contraction expected in the Eurozone economy, particularly in the second quarter. So yeah, they're going to need to do more. How far they can go, Lagarde may want to drag her feet a little bit, to see how far the ECB, the EU is willing to go. We're expecting further discussion on that in the coming few weeks. So let's see how that goes. Obviously, then we look at the EU member states and the EU project itself. There's definitely going to need to be more. If the EU fails to deliver, then the likes of Italy and Spain are going, hang on a second, why are we even a member of the EU if it can't even help us out in times of dire straits? So yeah, that's a big question.
And lastly, geopolitical news on that front. Anything that we should know about?
Geopolitical risk front. Well, you got the EU project. How the ECB and the EU member states step up to deliver support to those most adversely affected by COVID-19. That's one big area to keep an eye on. You've got obviously Brexit. Is there going to be extension to the transition period? Boris Johnson was looking for a framework to be in place by the end of June. That's highly unlikely considering he's just returned to office. And then, the big one to look out for is, rising tensions between the US and Iran. Trump would probably be looking and eyeing, some sort of raid or an attack on Iran. That's a great distraction as Joe Biden eats into his, lead ahead of the presidential elections later this year. We've heard of the US administration going to the UN Security Council saying that they never actually, left the nuclear agreement from back in 2015. That's a bit of an odd statement considering the publicity around it and the fanfare from the US administration once Trump, did actually walk away. So, there's a game afoot, and they're trying to, throw in arms embargoes, on Iran, with the likes of China and Russia, supplying arms to Iran. So that suggests that there may be an imminent move, as Trump looks to sever the supply of arms. Is there an imminent move with the US likely to launch an attack on Iran? They've certainly got the presence in the Middle East. So that, that's one to look out for. And wow, what a boost, to oil prices that would be to hit, supply through the Gulf. So there's something going on. So that's definitely the main political risk to keep an eye on.
Well, that's all for today, Bob. Thank you so much for joining us, and keep safe as always. That was your midweek market drivers. We'll see you again next week. And please don't forget to follow us on our social media platforms.